Alright, hello and welcome to Camel Finance. I'm your boy Camel, and in today's episode we've got some crypto news. I want to answer the questions: are we in a bear market rally, or is this melt up validated? I want to answer the question of how we can tell whether or not we're in a bear market rally or a melt up, what to look for in the charts, what I'm going to be using, which is cycle lows, and can the cycle lows hold or fail. That's going to be the tell for me. That's what I'm going to be using to determine whether or not this is a bear market rally or a melt up. I'm going to be talking about the large number of indexes, stock indexes, that are already at all-time highs or very, very close to. This is not typically the sort of thing you would see in a bear market rally. I'm also going to be talking about inflation expectations, what I think is going to happen in a couple of weeks' time when we get the US CPI print, and how that will impact any charts and risk assets. 5, if we get a melt up, the $2 trillion question is, can it drag crypto with it? I've got some nice data to show you regarding Bitcoin that kind of shows that anyone that's sold in this neighborhood has basically given all of their coins to the big boys, and therefore there's a good chance we're not going any lower. They're in position, they've already forced you to panic sell, and now it's possible that if we're going to get a melt up, crypto is going to get dragged along for the ride in a rally that is unlike anything anyone has ever seen before. And finally, 6, we'll go through the charts, my live trades and analysis, so you can see how I'm dealing with these markets in real time as a pro swing trader. If that's the sort of thing that sounds interesting, then sit back, relax, hit that like button, and let's get into this. I want to start by pointing out that I've been quite vocal about Elon Musk. I've made no secret of how I feel about him and what he's doing of late. However, I have to give credit where credit is due. He is saying that Twitter is no longer enforcing C19 misinformation policy. So this is something I had to give him a pat on the back for. I like what I see from Elon for the first time in a long time. Coinbase Wallet is no longer going to support XRP or XLM, ETC or Bcash. This is not to be confused with the Coinbase exchange. This is simply the Coinbase wallet, but I don't think anyone uses it. They cited the reason for removing these as a lack of demand. The UK City Minister is pushing plans to turn London into a cryptocurrency hub. So hopefully this can continue to drive adoption behind Bitcoin. Over in traditional finance, just another 6.2% pump on the HSI. And everyone thinks we're in a bear market. Okay, so this is the discussion I mostly want to have today. We have seen that the city in China is resuming bus and subway operations from today. Guangdong province is going to allow some close contacts of C19 to quarantine at home. So China is possibly starting to open up, and this explains the front running in the Asian markets. Henrik here says, look, so I got the Nifty 50 right, the all-time high is here, there's more to come. And now look at these other indexes, because these are going to start to catch up. And this is what I wanted to talk to you today about. Let's start with this Nifty 50, right? The Nifty 50 is printed an all-time high, as you can see here. Now, I would like to make the case that this is not the sort of behavior you would get from an index in a bear market rally. Just throwing that out there. That's my thinking. The FTSE 100 from its 5-year high is only down 3%, okay? As you can see here. Again, to me, that seems quite excessive for calling a bear market rally. The Dow Jones is only 7% from its all-time high. The S&P 500 is, however, lagging. And this is where I want to start to make the case for the million-dollar question. And the million-dollar question is the S&P going to catch up to the Dow? And more importantly, are they both going to make an attack and a push to new highs by Q1 of next year, in line with my melt-up thesis? The Nasdaq at the moment is lagging, but if you've been on this channel before, then you will be familiar with this chart here, where I show you that I think we're going to have this melt up, blow off top move into Q1 of next year, and then we're going to have the giant crash that everyone thinks is coming next. A simple formula to gain an edge in the market is a rising 10-year treasury yield means the S&P 500 outperforms tech. But at the moment, we've got a falling 10-year treasury yield, and that means tech should be outperforming the S&P. At the moment, it isn't. But during periods of a declining 10-year treasury yield, we would expect tech to catch up. So is it therefore possible that tech is about to have a monster move to the upside? Well, I think so, and that is why I'm positioned long. The $2 trillion question is, can Bitcoin catch up with the stock market? Bitcoin has traded as a risk asset for the last couple of years. It has largely moved in line with the Nasdaq and the Dow and the S&P 500. In addition to the S&P lagging the Dow at the moment and the Nasdaq lagging the S&P, Bitcoin is now lagging behind all of that. So again, the question is, has Bitcoin got a major explosion to the upside coming in the near future? It's undeniable that this market has caught the bears offside. The S&P 500% stocks above their 200-day moving average point towards more upside for equities. Again, this is not something that speaks to a bear market rally. Bear market rallies typically have low breadth, meaning low participation rate of the individual stocks within the index. Not the case today. I'm also looking at inflation to try to tell me what to expect from these markets. And as far as I can see, and I've been showing more and more of this data of late, everything points to CPI coming off and coming off strong. We know we're less than 2 weeks now from the December CPI readout for the US. They are hinting of late that perhaps we could expect inflation expectations to be up from the 6.9 forecast last month. However, absolutely none of the data I've shown on the channel over the past week points to this, and we even have the New York Fed president saying that he sees inflation falling to the low 5s this year and the low 3 zone next year. Believe me, if we can continue to put in lower and lower CPI prints for the 6th, 7th and 8th month in a row, in line with the M2 expansion rate declining even more rapidly as I showed in yesterday's video, then believe me, risk is going to come on incredibly strongly. Again, for those of you that are championing this bear market rally idea, and again, I would like to stress it's too early to tell, and I'll get to the charts in just a minute and show you exactly what I'll be looking for technically speaking so that I can identify whether or not we are indeed in a bear market rally. But taking a look at these analogs, if you're one of these people that thinks we have to roll over now, okay, here is a nice analog. Resolves to the upside. Again, resolves to the upside, resolves to the upside, resolves to the upside, resolves to the upside. It's a very dangerous game to assume that we have to put in one of these bearish fractals. Okay, these are roughly 50-50. I would say, if anything, these are currently more skewed to the upside. But make no mistake, thinking that we have to go down from here and this has to be a bear market rally is, in my opinion, completely wrong. Said another way, this is the internet's favorite fractal, isn't it? The 2008 analog shown in green. This is what we did during the great financial crisis of 2008 in green here. And it's do or die for this fractal right now. If I click on this, you can see we're starting to break away from it. If it's going to repeat this fractal, if we really are going down 50% from here, it needs to roll over, and it needs to roll over quickly. Otherwise, we're going to end up dropping into a cycle low quite shallow here, and I'll get to the charts and show you this in just a minute. And then we're going to rip out of here, and this fractal is going to be completely broken, okay? So again, I want to caution against being 100% sure of yourself. I know sentiment out there is as bearish as it's ever been. I know there's 1,000,001 reasons to be bearish, and I agree with those reasons. But I am a technical trader, and the charts are not telling me to expect more downside. Just before we move into the charts, I want to point something out to you. At these prices, the Bitcoin miners are under a lot of stress, and they have been selling relatively aggressively, as you can see here. Looking at Bitcoin usage, over 7.5% of all the coins have moved at this current price range, producing this massive bar. So at this level now, this 16,400-ish level, 1.5 million coins have been exchanged at this level. So you know that argument I've been making on this channel for a while? That argument that this was all a manipulation down to let the big boys in before this huge blow-off move? This absolutely backs up my idea. What this shows, what this says to me, is that they've brought the price down to their chosen level, and they have exchanged a whopping amount of coins. 1.5 million coins have been exchanged down here. Whilst retail has been panic selling, whilst retail has been expecting 12, 10, even 8k Bitcoin, somebody has been hoovering up an enormous chunk of the supply down here. All of the retail that has panic sold down here because of things like contagion fears and, oh, Coinbase has got to be next, Tether's got to blow up next, maybe. Or maybe you panic sold your coins to the banks, to the likes of Fidelity, to the likes of BlackRock and Coinbase, ready for what is about to be one of the biggest catch-up rallies the world has ever seen. Jumping into the charts, the dollar continues to break down. Again, cannot catch a bid, cannot produce higher highs. Doesn't mean it couldn't, but it hasn't done it yet. The 10-year yield, again, speaks to decline, not a rise. Doesn't mean it couldn't change, but it hasn't changed yet. US 2-year yield, working on a head and shoulders formation. Again, doesn't mean it couldn't resolve higher, but it hasn't resolved higher yet. I want to hop straight into the S&P 500 here, because we have one of two scenarios unfolding, and we need to be aware of both. Now, it's possible that this back here is a cycle low, and therefore we are on something like day 33. That means we would expect a drop into this cycle low around the 12th of December, which, by the way, is the day before the CPI print, the US CPI print. So does that mean we can expect to see a drop into this cycle low around the 12th or the 13th, and then we get a CPI print that is lower than last month's again, and that catalyzes the rally to new highs? Is this the sort of thing we could see, therefore? I think that's one possibility. Another possibility is that my original count is right here, and we're likely going to waddle up a bit higher and then drop into this cycle low and then blast off out of here and play catch up with the Dow. So those are the two scenarios that I'm looking at if this melt up thesis is going to be validated. Of course, if it is going to be validated, you would expect the UKX to continue to press on. We would expect the Nifty 50 to continue to press on. We would expect the Dow to continue to press on up here, right? But hopping back into the S&P, the big question is, how do we know whether or not this is a bear market rally or whether or not we're about to explode to the upside? All of that will come down to wherever this cycle low forms. If we can form a cycle low, wherever this forms, let's say here, okay? If we can form a cycle low and then we start to rally off, the thing to look for would be taking out that low. If we were to come back down here, lose that low that we set on the cycle low and start to move down, that right there is the trigger to say the melt up is cancelled. However, wherever this cycle low forms, whether it's back here like I showed you initially or whether it is as late as the beginning of next year, wherever that cycle low forms, if that low holds, then it's game on, it's melt up time, we're going to new highs. The Dow chart will look something like this, okay? And everyone will be left hating this rally. No one will understand it. It won't make any sense at all. Everyone will be thinking, but recession, but the Fed, bro, but this, but that. And ultimately, it will be the charts that give us the edge. This technical analysis, this knowledge of cycles is what is going to let us know whether or not we're going up or down. Hopping into the VIX chart, you can see here, again, we're still being contained. We're still being contained by this line. I've been saying for ages, I'm ready to take a long out of here when we break it, if we break it, but we haven't broken it yet. This does not speak to risk off. Nothing I've shown you today speaks to risk off, remember. Gold and silver continuing to push up as the dollar continues to break down. So no problem there. My super performing geo stock is now gapping up and going. So love to see that. Happy days. Again, can Bitcoin complete this Wyckoff spring? Oh, looky here. Looky here. Let me jump into this other chart. Okay. Again, it's starting to feel a bit like we may well have exchanged the amount of coins on the record amount of volume that was needed back here. It's really starting to feel like the big boys have accomplished what they wanted to accomplish. They took retail's coins and they put them into their own pockets. Does not mean we could not roll over and take out this low. But as I've been saying over and over and over again, this is lagging. This is lagging tech, which is lagging the S&P, which is lagging the Dow, which is lagging all the other indexes. This is starting to look more and more bullish to me. And we are now again in this position where we are only around $700 plus, let's call it $700 to $1,000 away from confirming this Wyckoff spring that I've been talking about for ages. Once this confirms, this entire schematic is in play, remember. Particularly if we can get a lower CPI print, that is to say below last month's readout, giving the Fed credibility to say everything's under control, don't worry, you can count on us. Then we're going to start to see things get very bullish very quickly. And given the divergence between the S&P 500 and the Bitcoin price, the upside move here could be violent and shocking to almost everyone. So in summary, I will be keeping a very close eye on where this cycle low forms. I expect this cycle low to form sometime over the next 2 to 3 weeks. I would not be at all surprised to see this cycle low form at the 12th or the 13th of December, coinciding with that CPI readout. Especially if that CPI readout is lower than the month before, then believe me, risk is going to come on strongly. Out of that cycle low, we will finally have our answer. If we form that cycle low and we explode off out of that in bullish structure and we never come back down to take out that low, then the melt up thesis is confirmed and we are going to be putting in one of these blow off moves that I've been showing on this channel over and over and over again. However, if we form this cycle low, come up a bit and then roll over and take out that low, then this is invalidated. I get to say congratulations to all the bears, you were correct. There's no melt up and we're going to be going much, much, much lower in risk assets. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, turn those notifications on if you want to see how I deal with these markets in real time as a pro swing trader. If you have anything to say, throw it down in the comments. And in the meantime, take care from me. All the best. Cheers. Bye.